AuditMate, AccountsMate, essentially the same program. AuditMate, you have the access to the audit steps and the audit programs, where in AccountsMate you don't. But that's the only difference. In both programs, you're going to produce financial statements. Really, primary purpose of AuditMate, AccountsMate was to produce financial statements and all the working papers that go with those financial statements. A few years ago, maybe about 3-4 years ago, we actually added the ITR14 as an option into AccountsMate. The goal of trying to use the same information to now produce the SARS ITR14. Obviously, when you are doing the annual financial statements, we're going to be using IFRS for SMEs framework, but SARS requires some specific disclosures. They don't just want IFRS for SMEs. They have specific things that they want. In the accounting framework that we use, we might just have cost of sales as a reported item. But in some of the ITR14s, SARS wants opening stock, purchases, and closing stock. Now, we don't want to change our financial statements just because of the SARS ITR14. That's not necessary. And I'm going to show you just now how that all fits together. Okay, same with revenue. They want revenue. Well, our total revenue would be net of credit notes, whereas in some of the ITR14s, they want gross revenue and they want to see what the credit notes were. Now, we don't want to report those as two line items in our financial statements, but SARS wants that information, so we have to give it to them. At the end of the day, AuditMate and AccountsMate with the ITR14 is going to provide you with the best way to prepare the financials and the ITR14. And here's the important thing. There's a full audit trail of disclosure adjustments. Okay, so we're working from a trial balance. That's what we get from our client. Okay, in AuditMate, we allocate it to lead schedules, and those allocations are used to produce both the AFS and the ITR14. So it's the same data. It's the same trial balance flowing through the system to produce the AFS and the ITR14. And you do them at the same time in the same system, and you know they're going to be the same figures. Okay, so we've got a trial balance. It flows through the leads. We've got the AFS and the ITR14 coming from the same figures. Okay, now obviously between these legs, there's more detail. With the lead schedules to get to the AFS, we have a way to group accounts together, maybe to change the reporting descriptions, that sort of thing. They would fit in there. And in this leg, we have some things where we can do tax adjustments, stuff like that. But this is the general flow of data. All right, what for doing ITR14? Okay, there's basically two classifications of companies. There's dormant companies and there's companies that are not dormant. Okay, a dormant company is one that did not actively trade during the year at all. Okay, if it traded for 1 day, it's not dormant and it needs to have a tax return. Obviously, in AuditMate and AccountsMate, we don't have a return for a dormant company. All right, you can just log onto your e-filing and complete the dormant company return very simply. You wouldn't be doing a trial balance, set of financials, and ITR14 in AuditMate, so we don't have that. Okay, so we're only dealing with companies that are not dormant. There are different types of returns. Obviously, there's body corporate return. That's for body corporates. And then they have three classifications: micro business, gross income less than $1 million, total assets less than 5 million. We've got small business, so that's between the 1 and 20 million, and the assets between 5 and 10. And then we've got the medium to large business. And we have different tax returns for each of those. In AuditMate, we have a multitude of returns. In that, for the micro business, we have the return for micro business and a micro business that's a small business corporation, SBC. Okay, we've got the small tax return, and we've got the small SBC, and we've got the medium large, and obviously the body corporate. And those are on the right hand side here. You can just see those are the files that are named inside the AuditMate folders. Okay, you don't need to touch those things. You just need to know that they're there. And when we get to the ITR14, the right one will be selected based on the criteria that we input there. Okay, now when you sign that ITR14, what are you signing? This is a declaration. Okay, it's serious. Okay, a declaration means it's serious. When you sign it, or your client signs it, you sign that you're duly appointed. Okay, that means you're going to take responsibility for this thing. Okay, the information furnished is, to the best of my knowledge, true and correct. That's in respect of everything. Every item in the ITR14 is basically a question. It's SARS asking you a question. Do you have gross income? What's the amount of that gross income? And you have to put down the true and correct figure. So it's very important that you fill in the right figures. Then you have to say, I've disclosed the gross amounts of all income. So that's all income that's accrued to the company during the period covered by the return, and that you've got all the necessary records, supporting schedules, declarations, and you're going to keep them for audit purposes. If you make a false declaration, then that assessment never prescribes. SARS can come back to it any time in the future, even 10 years later. What you sign is that everything's there, and you need to make sure that everything is in there. And this system is going to help you to do that, because it's going to let you complete the ITR14 before you get to the e-filing stage. Okay, we've got a little example that we're going to go through now. So what we've done is I've got a little example test ITR14 where I just got some random figures and I put it into a set of financial statements. We basically took that trial balance and we assigned it to the various lead schedules, and then we took it across into the financial statements. So they're shown on this side here. In the financials, in the detailed income statement, I just don't have a tax figure yet because I'm going to use ITR14 as my tax calculation as well. But I have a profit figure there, 464,600. If I just have a look up here, I've got sales figures and I've got a cost of sales. Okay, so I don't have the opening stock, closing stock story. I've just got a cost of sales. Okay, so on my PowerPoint presentation, there's my revenue figures, my cost of sales, gross profit, my profit before tax. We're just going to come back to these numbers to just check them as we go along. And then we're going to do some adjustments for credit notes and opening and closing stock. All right, so assume we've prepared these financials up to that point, and now we're going to go to ITR14. So we just click on the tax tab at the top here. And the ITR14 HelpMate wizard starts up, and the first thing it does is ask you about your tax practice number, etc. This information you fill in once, then the system saves it and will use it again for all your clients, not just for one client, but for all your clients. So you would fill that in, click on next, and it moves down the little selections on the left-hand side here. Okay, so we're looking at the company information, and it's already pulled through the gross income amounts. Okay, remember that's the figure I showed you earlier, and the total assets. And these figures are used in determining which tax return is going to be applicable. Right, at the moment it's showing us there, small business corporation. It's asking us a question, is it a body corporate or share block? If we say yes, we're going to go to body corporate return. No, we're on small business. Do we have any local or foreign capital gains? If we say yes, then there'll be schedules for us to fill in later. And then those schedules will automatically get fed into the ITR14. But I'll just leave those as no for now. Click on next, and we get to the questions about small business corporation. So is it a small business corporation? Okay, let's say yes. And as long as I've answered yes to all 4 of these pertinent questions, it's going to tell me the return type is small business corporation. Okay, if I say no there, it's going to say we don't meet the criteria, and so it's not an SPC on any of those items. Put them back to yes, and we are an SPC. Okay, so this is now how the system selects which return is going to be applicable for us, because the return changes, as you all know, I'm sure, depending on the turnover, the assets, and the disclosure requirements change quite considerably. On the large medium return, there are a lot more pages, a lot more detail that's required. Okay, we click on next. So you can see it's very easy. It's just a system that's just asking you the questions. Okay, all the details pull through automatically. These are the questions that are asked on the return. You just answer them. Please indicate where the majority of the company's taxable income is derived from. Okay, and you're going to fill that in. And then we've got source codes. Right, now we made some little lookups so that you can go and select the source code that you're looking for. Okay, let's go with some retail trade. Let's just go other. All right, and then there's the profit codes, same story, and if it's not specified, then you just type in the description. Pretty straightforward. Hit the next button. Right, this little graphic shows you where things are going to. Obviously, we're aiming at the ITR14. Okay, so these green arrows pointing at it. What gets into the ITR14? Well, it's the tax leads, the tax comp, and the capital gains, if appropriate. That capital gains, if we go back to here and we say yes, then the capital gains is switched on, and we can go into that and we can fill in a schedule of capital gains. Okay, I'm going to leave that out though because it's pretty straightforward. So I'll go back there, switch that off, back there, and the capital gains are switched off. Okay, so the tax leads feeds into there. How do the tax leads get determined? Well, they get determined from the accounts, okay, the trial balance, and from tax journals. Okay, so a starting point is the accounts. Let's click on there. And what you'll see is there's our trial balance, okay, with all the account numbers and the rounded balances. Remember, we round our figures that go into the financial statement. So we want them to be the same figures that go into the ITR14. So we deal with the rounded balances. And then we've got source codes. Okay, these are the SARS source codes. Those source codes you do not see on the ITR14 anymore. 4 years ago, you used to see them. They used to be in little brackets next to each of the disclosure items. But SARS dropped them from showing on the return, but we've kept it because we've got history on it, and it fits in with the system. All right, now those source codes, these accounts get those source codes when they were allocated to the lead schedules to produce the financial statements. If you want to check all the source codes are there, you can click on source code there, run this right up to the top, and you can see, okay, there's a source code for every item. Okay, if for some reason you've added your own lead schedules or whatever, there might not be a source code for every item, in which case you can add it here. Okay, simply double click on the item and choose from the drop-down list. So that's a starting point. Trial balance allocated to source codes. That feeds into the tax leads. Okay, now these tax leads vary depending on the ITR14 return that has been selected. That's been automatically selected. So in this case, we are looking at the small business corporation. And let's see, we've got quite a lot of tax leads. Okay, there are a lot of items down the side. If we look at non-current assets, there are quite a few items. Okay, if we were on a micro return, there'd be far fewer items. These are the disclosure items that are in the ITR14. So if you look in the ITR14 for the small business corporation under non-current assets, these are the items that they want. Fixed assets, plant and equipment, fixed assets, vehicles. Okay, vehicles is a new one this year. It wasn't there last year. Fixed assets, other. I'll just show you quickly. Let's go and grab one of these returns. So here's the return. Let's just go down a page or two. Okay, so we're dealing with the balance sheet, non-current assets. So we've got property, plant and equipment, vehicles, investments in associates and joint ventures. Let's just go back and we look here. Vehicles, investments in subsidiaries. Got various loans. Okay, we've got the two different loans there as well. If we go to, let's look at the income statement. Okay, we're looking here at, on the gross income side, we've got sales, closing stock purchases, opening stock. Okay, if we go to here, gross profit, we've got sales, opening stock purchases, closing stock. All right, and we've got our figures from our trial balance allocations are here. There's the purchases figure. Now remember, in our financial statements, we didn't differentiate or make the adjustment for opening stock, closing stock. It's just all in cost of sales. So it's all in this 204 figure. Okay, but the ITR14 wants it split out. So we need to split it out. Okay, how are we going to do that? Okay, what we're not going to do, we're not going to go to our trial balance and create accounts for opening and closing stock and change our financial statements. No, we're not going to do that. We're going to do it all within here. And we're going to do it by passing what we call tax transactions. Those tax transactions there. Same thing, but I'm going to get to it from here. So I'm on my gross profit side. I'm going to go to tax transactions and I'm going to make adjustments for my opening stock and my closing stock. How will I do that? I'm going to insert a new journal. I can put in my prepared, reviewed, manager, etc. And let's just call this stock adjustment. Then we'll put our transactions in here. Okay, so what we're going to do, we're going to bring in that opening stock figure, okay, which was 50,000. Okay, to which source code? Okay, I don't know the source code, but I click on the little button, and the way I look it up is very simply by choosing from this list. So there's my opening stock, 4732, double click, 4732, done. Okay, my closing stock adjustment, look on the list. Where's my closing stock? Yeah. That was 75,000, if I'm not mistaken. And it's a minus. And then my difference is going to go to my purchases. Purchases other than foreign connected. Okay, and there's 25,000. And it balances. When I close this, those transactions automatically get posted in here under this column, tax transactions. Accounts balance, that's my trial balance figures. My tax transactions is my adjustments, and tax balance is what's going to be going in the ITR14. Now you'll notice it keeps track on the left hand side here of the profit, and that 464,600, that's still the right profit. Okay, we haven't adjusted the profit figures, not at all. Our gross profit's still the right gross profit. Those numbers are still the right numbers. Okay, and I've made my adjustment for my opening stock and my closing stock. Now in this case, I also said, okay, what about credit notes? 30 grand. Okay, do I need to do that adjustment? In this case, I don't, because this particular return, small business, SBC, doesn't differentiate. It doesn't want you to disclose that credit notes figure. So I'm not going to disclose it. Okay, if I was on the bigger return, it would want it, and then I would put through a tax transaction for it. If we click on ePrint, okay, now, okay, in order to ePrint, I think I'm going to need to have the index open. Okay, but me click go there, and that's been saved into my index folder. Okay, right down at the bottom of my index now, I've got my tax leads. Now, this gives us a full audit trail. Actually, this gives us the figures that are going to appear in those sections of the ITR14. So it's all in there. That's exactly what's going to appear in there. Okay, if I go back to my ITR14 helpmate, let's just go to our, okay, so we've got our tax leads now, and those are the figures that are going in there. And we have got now the figures that we just printed out on this printout here are figures that are going to be going through into the ITR14. Okay, this green arrow. So those are all the disclosure items that go into the ITR14. So that's this page and the previous page. So the balance sheet and the income statement. And then we move on to the tax computation side of things. Okay, so the tax computation is this side here. In the tax leads, okay, there are some other disclosure requirements. Okay, so we did the adjustment for the opening and the closing stock, but the other disclosure items. So for example, if we look under the expense items, okay, these are all the expense allocations that SARS wants from us. So there's travel, accommodation and travel expenses local. Okay, if you need to make the column a bit bigger, you can do. There's accounting loss on disposal of assets, admin, management, secretarial, rentals to non-connected persons. Okay, so there's quite a lot of things there. And if I run down, I'll see which accounts are allocated. So under other, okay, others where everything else is grouped. I need to go through these items and see if there's any of them that need to be put into the disclosure part. So I need to actually just look through this list. And I would find things such as accommodation. Okay, accommodation was something we mentioned back up there. Accommodation is source code 4761. So I can go to here, double click, and change the source code to 4761. Or I can select from this drop down. Or what we've built in recently is to just drag and drop. So I can select it, I left click and hold, and then just move up the list, and I drop it on the item I want. And now that appears under there. So I need to go back, go through here, look for other items that need to move further up the list. So we had, okay, I don't have rent here. Oh, I've got rent here. Rent and electricity. Okay, I've got 2 rent and electricity items. Okay, let me pull those up the list. Yeah, there's rentals, okay. So I'll drop that on there. Come back down, find my other rent one. Go back up the list. Okay, you got the idea. Okay, so these items indicate these are disclosures that are required on the ITR14. You can complete the ITR14 and then come back and change it again. It can move backwards and forwards. You can move through the system as you like. You know, you can do this, actually produce the ITR14, print it out even, and get someone to review it. And they will say, no, hang on, these items need changing. You come back in here, you make those changes. Okay, so that now tax leads feeds through into the disclosure part of ITR14. Now the tax computation. Let's have a look at this. We're dealing with a small business, SPC. So these are the items or the sections that are in the tax computation part of the ITR14. So here's the tax comp part. We need to identify those items now which we need to account for in the tax comp. So generally things like non-deductible amounts debited the income statement, depreciation. Okay, so depreciation according to the financial statements. Okay, I don't know what the amount was. I'm going to have to go and look it up. So I can close there, go back to my tax leads. There's my depreciation, 11,909. Okay, come back in here, depreciation, 11,909. Now you'll notice on the right hand side we have a little column that says schedule. Okay, and there we can link a schedule for this, because you remember when you do the declaration you say you've got schedules for all these adjustments. Okay, so if I click on that, it will open up a schedule in Excel. Actually it just creates this schedule, heads it up with DEPR there, which is the reference there, and that would be a schedule of my adjustments. Okay, now that might be my wear and tear schedule. Okay, so this gets saved as DEPR.xls. Okay, so let's go and, well, we can fill it in here. We could copy and paste, whatever, or we could actually go and wear and tear schedule, which is in my fixed assets calculation, which would be under section F. Okay, and I would have an asset schedule here. Let's have a look and see if there is one. Okay, so there's my my asset schedule. Now I could save this. Just go File, Save As. Now underneath my client, I've got a folder called Tax Schedules. Okay, and that is where DEPR got created. So I can save it as that. So I've made a copy of my fixed asset schedule essentially. Come back to my ITR14, my tax comp. There's my little schedule. If I click on it, it should open, and it opens up with my fixed asset schedule, which I just saved. Now obviously the other side, okay, so I'm adding back my depreciation. I want to claim my wear and tear. So that's going to be under allowances, special allowances not claimed in the income statement. There's our wear and tear, and I need to have a schedule of that, so I should create a schedule. Okay, that'll be saved as 4427.xls, and I can take my wear and tear schedules that I've got in my file, save it as that, and it will then be linked in here. And let's go with 11,909 as well there. I'm just making it the same, so my depreciation and my wear and tear are the same in this case. All right, so this is where all the tax adjustments go in. We used to have a schedule in here under section U, I believe it is, tax calculation document, okay, which was just an Excel spreadsheet, which would bring forward these details and it would do the calculations for us here. Okay, so wear and tear would make 11,909. But we're replacing this now. Okay, we're replacing this with a better option. So don't use this anymore. Don't use U300. Use ITR14. That's the only purpose of me showing you that. Don't use this now. Use ITR14. Okay, so back to the tax comp. So use this tax calculation. And when you've completed all these adjustments, then you can e-print it. And there will be then your tax calc. Okay, so there we're adding back the depreciation here, and we're taking off the wear and tear there. We're coming up with our taxable income figure, adjustments for capital gains, assessed loss we can bring into account, and it's calculating the tax based on small business corporation tax rates. Okay, 41216. If we look in my summary, 41216. If we answered our questions differently about small business corporation, we said no, come to the tax comp, it's not 41216 anymore, it's 130. Okay, so the tax calc is all happening in the background there. And on the summary, it actually just shows you those items where we've got adjustments. Okay, these items, this is all the possible adjustments, and this is a summary of what the adjustments actually are. Okay, let's close that down again and go back and make it yes for the small business corporation. Okay, 41216. Okay, at this point, I would want to put that tax adjustment into my financial statements. Okay, because if you remember at the beginning I said I've done the financials with everything but the tax calculation. So at that point I'm going to print it my tax calc, and I'm going to go into my accounts, and I'm going to put through a journal entry. So I'm going to insert a journal. Now this isn't a tax journal. Okay, this is a journal in my accounts. There's a date, tax provision. I want to find the tax expense account, so that's under Z008. And I said 41216, that's the debit, and the credit is going to go to tax payable. 41216 credit. Okay, post and close. Okay, go back to my financial statements. Okay, if you look here, just to show you. Okay, we've got nothing for tax there. Okay, let's open up these financials now in Excel. Run down, we've just passed the journal entry, so that's come through by itself. Go to the balance sheet, just make sure the balance sheet is still balancing. Reprint this to a PDF. Let's just go down and have a look. This page. Okay, we go 41216. Save my Excel. 41216. There we go. And now back to my ITR14. I just want to check on my disclosure. Okay, same profit figure. Nothing's changed. All right. Now, I've done the tax calc, 41216, and I'm ready to put that into the ITR14 return. Okay, so that's my disclosure sorted. That's my tax calc sorted. If I had capital gains, I would do that. And I'm going to go ITR14. Okay, replace the blank ITR14. Yes. Would I like to fill the form in? Yes. The form has been filled. Okay, you can now make changes which will be saved when the form is closed. Okay, there are places now still to make changes because there are certain extra disclosures which are narrative. They're not from the trial balance. But the form has been filled in now. Okay, so it's taken the small business SBC return. It's filled in the figures for us. If we go to the next page, it's filled in details of the company. It's filled in my tax practitioner details that were on the front page. It's answered these questions for us. It's put in the figure for the gross income. Okay, we'll go in here. Now it's the disclosure item. So this is all from the tax leads. So all these amounts are now filled in. Okay, where we've got extra disclosure is in blocks like this. Okay, please provide descriptions. So, okay, there's no need to put a description there because we don't have any other non-current assets. But there will be some places along the way here. It's going to make this a little bit smaller so you can see there actually are some extra fields that we filled in here. These are fields that are not on the actual ITR14, and they're all in red text. But they're fields that we filled in so that you can double check that things tie up. So here we've got total assets, and here we've got total capital and liabilities, and obviously they should agree, which they do. And here we've got check balance sheet total should be 0. Okay, it is 0. So if something went wrong, if we had, say, an account that wasn't allocated to a disclosure lead or source code lead, then this would be non-zero, and we would see that there was a problem. We'd pick it up at this point. Part of the benefit of using ITR14 here is that we can work backwards and forwards. We can work between our trial balance and the ITR14. You can't do that on the e-filing system. In fact, you can't even print out the ITR14 until you've filled in all the mandatory fields. Okay, so you can't even print out a blank return and fill it in by hand. Okay, so this is way better because we can work between the trial balance through the leads into this ITR14. Okay, if we go to the next page, just trying to find where there's a field that we might want to fill in. Here we go, other expenses. Okay, please provide descriptions relating to other expenses. Okay, and so that's a block for you to fill in. We've got a figure there, 315,000 other expenses. What are they? Okay, let's go find out. Pretty easy. Let's click OK here. Let's go to the tax leads. We'll go to expenses and we look at other expenses. Just open that up and there's our items. Okay, or we could look at our financials and we could use items from there. So they just want an idea of what those items are. Maybe we choose some of them. Admin expenses, telephone, close that, come back to the ITR14. Do we refill it all? No, we don't this time. Okay, we won't replace it. Say no. Would you like to fill the form with updated data? No. We've got all our data in. Fine with that. Just want to go forward to my other expenses. And I'm going to put their telephone. Okay, you can just type those details in. And basically now we're completing the return as it's going to end up on e-filing. When we've completed it, okay, because everything's now coming through. Here's another one of our check boxes. Should agree to net profit. There's our net profit, 464,600, 464,600. All good. Happy with that. Okay, our tax comp parts are all filled in. There's our wear and tear that we claimed. There's the control totals. And even at the end of this, we added more things again, okay, because this the capital gains inclusion rate and stuff is not on the ITR14. In fact, the ITR14 that SARS does on e-filing doesn't come down to a taxable income figure. Okay, but I want a taxable income figure there that I know figures that are in this return actually agree to that taxable income. So I added in this field and it's self-calculated so that it comes out to the figure that we expect it to come out to. Okay, now we submit this return to e-filing and we get the assessment back and it doesn't agree to that figure, then there's something wrong actually on their side. Okay, we've got something we can work with, something we can come back to. Okay, then also after we've done this part, there's a whole lot of questions. Okay, and I can fill in these questions, the answers to these questions. Okay, did the company make any contributions? No, no, no. I can fill them all in and it's all done here. Then it's a case of the partner can review this return, sign it off, happy with it. Your clerk who does the e-filing or your in your tax department, they can then just capture this into e-filing and send it off. But all the preliminary work has been done. You have an audit trail of transactions. You have a way to actually review the thing before it gets through to the e-filing. Okay, and we can e-print it. Okay, e-printing is saving it into our index. Okay, so we just say okay, and it actually, if I close this, it goes into our index right down at the bottom. But there's the ITR14 tax return there. And if you want to physically print that onto paper, then you just click on the little printer icon up here, select your printer that you want to send it to, and print. Okay, Clayton says, can I show how we did the tax journal? Sure. Okay, remember we did the tax comp. Okay, let's go back to ITR14 here. Let's go to the tax comp. I actually just want to print that tax comp. Okay, so I e-print it. It's been saved. Okay, so that's in my E folder there. There's my tax comp. All right, and at the bottom of it, it has the amount 41216. To process that journal in AuditMate. Now, Clayton, that's what we're talking about. I go to journals. Okay, so accounts, journals. and there is the journal entry that I put through to record that transaction. Okay, so it's not going to happen automatically. Definitely not. I mean, your client might already have made a provision for their by their calculation, but you disagree with their calculation. So we don't want to just automatically put this through. We have to use our brains and put through the right amount. Can it do an IT14 SD also if necessary? No, it can't. We just do the ITR14. That SD is then the reconciliation between what other things you submitted to SARS and this form. So it's kind of external to what's in the trial balance. It revolves around items that are actually in the ledger accounts. But do remember that we do have those schedules. Okay, so under the tax comp, there's a place for a schedule. For every single tax adjustment, you should have a schedule. And this system makes it easy to create those schedules and keep them all in one place. Do we reverse the closing stock tax journal in the following year? No, we don't, because it's not an accounting entry that we've put through in our accounts. Okay, in our accounts we just dealt with cost of sales. Okay, and the cost of sales is made up of opening stock plus purchases less closing stock. Okay, this is purely a disclosure item. So it's SARS wants us to disclose it in that way. Okay, they want it disclosed this way. So we're actually taking that cost of sales figure there and we're breaking it up into what it's made up of. So no, there's no adjustment to be made the next year. Question from Sylvia, and can you import from Pastel or QuickBooks? Oh yes, you can import from Pastel and QuickBooks. That's in terms of preparing obviously the financial statements. You'll see under the accounts we've got these import options: Pastel, QuickBooks, and Excel. All right, and if you need some help on those, you actually click on the Help tab, and when you run the AccountsMate for preparing the financial statements, one of the early steps is doing the import from Pastel. And if you click on this item, you're going to get a PowerPoint presentation on how to bring in the trial balance from Pastel into AuditMate. Okay, and it shows you how to do it. Okay, so most definitely we can do that. Gary's asking, could I give my opinion on the question under company information that says, is the company resident in South Africa for income tax purposes? Well, okay, that's obviously quite a technical question, but if it's a South African registered company with a permanent establishment here, then it certainly is. And I think that permanent establishment plays a part in that. Okay, if you say yes, then it requires info re-contributed capital. If you say no, it asks why you are resident or something along those lines. Yeah, I think every case needs to be dealt with. So I think we need to just look at the specifics. But most CCs are going to be resident, because South Africa is actually the only country that has CCs, and there are probably not many local South African companies which are non-resident, unless they're trading purely overseas. But I'm not sure on the answer there. Can I please go through the procedure for the credit notes again? Okay, I didn't actually make an adjustment for the credit notes, okay, but I can show you how to do that. I'm going to just close this because this is just an example. All right, I'm going to just make, say, the fees a lot more, just so that we move into the bracket where, okay, I'm just fudging the trial balance. Okay, don't worry about it, but I just want to get to an ITR14, which is now medium large business. So I just increased the turnover figure, so I could just get it to do a medium large ITR14. Okay, so now if I look at the leads, you'll notice that there's a lot more that's required. There's the credit notes requirement, there's the rebates. So if we wanted to do an adjustment now for the credit notes, okay, what's happened in the accounts is the credit notes have been set off against sales. Okay, so we're going to be reversing that in effect. So we go to our tax transactions, we'd insert a new one for credit notes, and we would now insert a transaction. So first thing is we would be looking at the credit notes. We want to disclose that separately, and that would be, say, a 30,000 adjustment. And then we want to do the adjustment for the sales, which would be the gross income, this part. So remember, our sales are less by the credit notes, so we want to increase them, so that's a credit. Okay, and we balance, close, and there now under our credit notes we'll have 30,000 displaying, and our sales will be more. Okay, if we go and fill in now the ITR14, just so you can see, where that figure should come through. In here, which it doesn't for some reason. I'll just have to look into it. Okay, but that's where you would put through that adjustment. Okay, will it be possible to import from Omni? Okay, Omni accounts, if you can get the trial balance into an Excel file, then you can import it into here. So under our import options, we've got specifically Pastel and QuickBooks. Okay, the reason we have QuickBooks is because, or a specific import, is because the account numbers need to be created for AuditMate. And Excel is just the catch-all one. If any accounting package, you can generally get it into Excel and then you can import it in there. Will the account codes on AccountsMate pull through from Pastel, or must this be manually set up? Okay, when you import from an accounting program, you import the account number, the account name, and the amounts. And then your first step after that is to allocate to lead schedules. And there's a simple process to do that. We've got some webinars on it as well, so you can see that. But yeah, I mean, there's no problem getting your trial balance in and getting it assigned to the leads. Very straightforward. How does one submit the form to e-filing once you're satisfied with the info? Okay, that's not an automatic process. Okay, e-filing, we've looked at doing this the same way as some of our competitors do, but the e-filing, or the way that you get this into e-filing, or the way they get it through into e-filing, is like a backdoor way, and it's got so many problems. I'm not prepared to go down that route. So here, when you've got the ITR14 ready, approved by a partner, you basically do a copy and paste of each of those fields into the e-filing ITR14 and submit it that way. So there is a manual capture process, but it's capturing a thing that's already been approved. And if you remember what I said earlier, you can't work on the e-filing one backwards and forwards between your trial balance and the e-filing one. Okay, but you can with this one. Okay, so it's just purely a manual, simple manual process at the end to take it from this ITR14 into the one on e-filing. So the benefits of using ITR14. Firstly, it chooses the correct form for you. It's got a better tax calculator than just using a spreadsheet. We've got source code and profit code lookups. I did show those to you. You can do the schedules, attach your schedules to the relevant items in your tax computations. We've got journals that we can put through for disclosure adjustments, and you can check the whole form before you send it through to e-filing. Okay, it's like a new system, really. It will change. And I spoke to one of our users this morning, and he said, you know, this thing is going to change the way that I run the tax preparation side of things in my office, because I can do it all inside AuditMate, get it all finalized, get the accounts finalized, get the ITR14 finalized, sit with my client, get everything signed, and then just submit it to e-filing. It's a new way of doing things.